Today we are covering risk classification categories for the national portion of the life insurance exam. Understanding how an insurance company sorts applicants is fundamental to the underwriting process and is a frequent area of testing on the national exam. When an applicant submits their paperwork, the underwriter's primary goal is to place them into a category that accurately reflects their risk of death. The first category you need to know is Preferred Plus. This is reserved for the elite group of applicants who are in excellent health and have no family history of early death or debilitating disease. These individuals receive the lowest possible premium rates because they represent the lowest risk to the insurer. Just below that is the preferred category, which still consists of very healthy individuals who might have one or two minor issues that prevent them from reaching that top tier. The benchmark for the entire industry is the standard classification. On your exam, you should view the standard category as the average person with average health and a normal life expectancy. Actuarial tables are built around this baseline. If a question asks about a typical applicant without specific health problems, they are almost always categorized as standard. Now we move into the substandard category, which is where most of your tricky exam questions will hide. A substandard risk is someone who has health issues or potentially a dangerous occupation or hobby that makes them more likely to die sooner than average. In exam terminology, a substandard policy is often referred to as a rated policy. This means the insurer is willing to cover the person, but they must charge a higher premium to offset the increased risk. There are two main ways the insurer does this. First is a flat extra, which is a specific dollar amount added to the premium for a set period. Second is a table rating. This is a crucial detail for the test. Each table rating level or letter typically adds 25% to the standard premium rate. For example, if someone is rated as Table B, that usually represents a 50% increase over the standard rate because they have moved 2 steps up the risk table. The final category is declined. This simply means the insurance company has determined the risk is too great to provide coverage at any price. It is important to distinguish between substandard and declined because exam questions will often try to trick you into thinking a person with a chronic condition must be declined. In reality, many chronic conditions simply result in a substandard rating rather than a flat rejection. A major factor that cuts across all these health categories is tobacco use. You should expect questions about how smoking affects premiums. Smokers generally pay 2 to 3 times more than non-smokers even if they are otherwise healthy. This is why you will see classification tiers like preferred smoker or standard smoker. To remember the hierarchy from best to worst, you can use the phrase, superstars stay super diligent. This stands for preferred plus, then preferred, then standard, then substandard, and finally declined. If you can keep that order in your head, you will be able to identify which applicants should be paying the most and which should be paying the least. Another common exam trap is asking about the mortality rate in these groups. Remember that the preferred plus group has the lowest mortality rate, while the substandard group has a high mortality rate. If you see a question about which applicant receives more coverage for the same dollar amount, always look for the one in the highest health category. This classification system ensures that everyone pays a premium that is fair and mathematically sound based on their specific situation.